Why Michael Saylor keeps buying Bitcoin? Michael Saylor keeps buying Bitcoins for one reason that many people still misunderstand. He appears to believe that holding large amounts of cash long term can be riskier than holding a scarce asset. Let me explain. Most people think risk means price swing. Saylor seems to think real risk can also mean losing purchasing power slowly, quietly, years after year. That belief is why he moved billions into Bitcoin. Now, whether someone agreed with him or not, that ideas alone change how many people think about money. So the real question becomes, what does Michael Saylor understand that so many still missed? Because if he is wrong, this becomes one of the boldest corporate mistakes in modern history. But if he is right, then a lot of people are still measuring risk in the wrong way. When most people hear Bitcoin, they think charts first. They think hype, volatility, dramas, and people online yelling price targets like they own a crystal ball. But Saylor has been pointing at something deeper. He is not just talking about an asset that can rise in price. He is talking about storing values across time. That means protecting the purchasing powers of your work, your profits, your savings, and your futures. This is much bigger conversations than what Bitcoin is doing today. And this is where many people miss the entire point. Most people were taught to earn money, save money, and trust that saving alone solves the problem. But what if the money itself is losing strength faster than most people realize? What if staying still is actually moving backward? The question is uncomfortable, but it is also the question Saylor seems to have asked before most others did. Think about a company. It works for years to build profits. It deals with taxes, payrolls, lawsuits, competitions, supply chain stress, endless meetings, and constant pressure. Then after all of that effort, where does the saved capital go? That is the part most people ignore. Saylor looked at that pile of capital and asked a different question. How do we protect what we already earned? That is a high-level investing question. And once one company asks it publicly, every competitor has to quietly wonder if they are standing still while someone else upgraded. That is how adoption spread, not by speeches, by incentives. Now bring this down to everyday people. Maybe you do not run a $1 billion company. Maybe you run a household. Maybe you are trying to protect your futures while juggling bills, stress, and limited rooms for mistakes. That still matters because your savings represent stored labor, hours of your lives converted into money. So where you place that stored value matters more than many realize. And here is one of the biggest investing lessons in this whole story. Something calm is not always safe. Something volatile is not always dangerous. That may sound simple, but it is powerful. A saving account can look calm while purchasing power erodes. A scarce assets can look chaotic while strengthening over long periods. Short-term movements and long-term strength are not the same thing. That distinctions can change how someone invests forever. Now, let me be clear. Bitcoin does not move in straight lines. There will be pullbacks. There will be fear. There will be scary headlines. There will be moments where critics declares it's finished again and again. That comes with territories. But Saylor seems focused on a long horizon, not next week, not next month, years. And that's maybe another lesson regular people can learn. Time horizon changes everything. Money needed for next month should be treated differently than money meant for 10 years from now. Those are two completely different jobs. Many people mix them together and then blames the asset. Now, another reason Michael Saylor became so influential is this. He did not just buy Bitcoin. He explained why over and over, clearly, confidently. Whether people agree or disagree, he forced millions to reconsider what risk really means. He forced the companies to reconsider treasury strategy. He forced the individuals to ask whether cash alone is enough. That influence is real. And history often works like this. People laughed at new ideas early, then they studied them later, then eventually they claimed they always understood them. We have seen that patterns with the internet, smartphones, and many major shifts before. Bitcoins may not be different. Now, I want to speak to viewers who feels behind. Maybe you think you missed it. Maybe you think wealthy people's already got there first. Maybe if you think if you cannot buy a giant amount, there is no point. That mindset can freeze people for years. But the real games was never perfections. It was progress. It was never about showing off. It was about consistencies. It was never about predicting every move. It was about building over time. Some people spend years debating this. Others quietly build. Some wait for certainty. Others study, learns, and acts responsibly. Guess who often end up stronger over the long run? The quiet builder. So when Michael Saylor keeps buying Bitcoins, I do not think the message is only price go up. I think the deeper message is this. Protecting value matters. Thinking long-term matters. Understanding risk matters. Scarcity matters. Discipline matters. That is not a small lesson. And maybe the wildest part of all, this entire shift may be happening in plain sight, while many remain distracted by our charts and temporary headlines. Tell me honestly in the comments, do you think Michael Saylor is visionary or taking one of the biggest risks in corporate history? If you got value from this, subscribe for more straight talk like this. And don't forget to hold it tight and stack it right, my friends. Take care.